The largest pool of wealth in the world, a global total that is twice the world's total pension savings and 10 times the total of all the sovereign wealth funds on the planet, is still comprised of commercial assets that are held in public ownership. And yet, whilst this is the largest pool of assets in the world, it's also one of the murkiest. What goes on inside them is often not even properly known by the governments who own them. In most countries, this vast portfolio is both a fiscal and political burden on society. If professionally managed, it could generate an annual yield of $2.7 trillion, more than current global spending on infrastructure. So says The Public Wealth of Nations, how management of public assets can boost or bust economic growth. Co-author Dag Detter joins me now. Public assets, what can they do for the economy? Talk me through The Public Wealth of Nations and what it proposes.
It's trying to shed light on public commercial assets, so government-owned assets that could generate a fee. So not the ones that are funded by taxes, but rather real estate, corporations, banks, etc.
So in essence, you're suggesting sort of taking public assets out of the hands of governments and maybe even putting them in the hands of bankers. And bankers, of course, have a very bad reputation at the moment. So although this obviously seems like a good idea, I can't imagine it would be a very popular one.
These national wealth fund, which is part of the idea of managing public commercial assets, is like a private equity fund, but it's 100% owned by the government. So it's not like giving it to bankers or private sector, private equity people, but to give it to more like a central bank. So it will be managed by people that are actually responsible towards the public and the parliament. But they will be private, they will have private sector expertise rather than being employees inside the government.
So how much are we missing out by not doing what you suggest?
If you see it on a global basis, 1% yield from central government commercial assets alone would be the equivalent of the GDP of Saudi Arabia. And if we would manage this more properly, say around 3.5%, 3.6%, it would actually be able to fund all the infrastructure that we have in the plans at the moment.
But if it's such a good idea, why aren't governments doing this?
They are not managed in a consolidated manner. So you need to have transparency to a list of assets to first of all see what we own, and secondly do a market valuation of this. And it's been talked about for half a century to do this. But unfortunately, governments and the public debate has got stuck in a phony war whether we should privatize or nationalize this. And this has led to that governments are not very keen to get transparency on this. But if we instead start talking about the quality of asset management rather than the ownership, that it would make a lot of sense to sweat these assets so that we can get a yield that would either be able to pay down the debt that all governments have, and quite to a large extent, or to supplement the government budget, or to finance things like infrastructure.
Governments never really seem to get it right. In fact, they constantly break things. Is this just systematic or can it be fixed?
Of course it can be fixed, but commercial assets don't mix well with politics. And that's why, just like a central bank or the management of a pension fund should be outside of a government. And we have done it with the pension funds, and independent central banks are almost common sense to every nation today. And this should be probably the next step.
So Gordon Brown selling all our gold when he did. In reality, how irresponsible was this?
When governments are actually selling, it would be much better if this was also done by an external agency or a holding company, because the track record of privatization is always that politicians are responsible for this. The discounts are too high, while if it was professionally managed with an incentive to maximize value, that holding company or national wealth fund would have a much bigger incentive to actually sell at maximum price, which would then benefit the taxpayer who are the present owner.
So how should governments create wealth?
The rule of thumb is that 2/3 of commercial assets owned by governments are real estate. Most of the time, in most governments, I have yet to see a government that has a clear understanding of what they really own. A few countries have been rather good at this. Finland, Singapore, Sweden, Austria have been pioneers in this area and created holding companies or national wealth funds to manage their assets. And there are really two schools about this. One says you consolidate everything in a central holding company, And the other one is by department, so that the Ministry of Industry has one holding company for its, and the Ministry of Education has one for all the universities and schools, etc., and so forth. So there's different ways of doing it. And I think the most important thing is that you put it outside of the government into professional hands and into a professional vehicle that could manage this more commercially.
Doesn't that create more risk?
That might be the instinct, but you should rather ask the question, can we even assess the risk today? Because there's no transparency, there's no market value, there's no strategy. So I think the risk is much higher when we're talking about an unknown factor and an unknown asset class that we don't even know the first thing about.
Finally, how important is government input in distributing wealth?
Well, all these commercial assets, they are the taxpayers' wealth. It's the people's wealth. No yield coming out of this, not appropriate yield. If you are comparing with a national wealth fund like Temasek, who has a yield since inception, a return on capital of 16%, if you compare that with any other developed nation in the world, nobody could, I don't think there's anybody who can tell you the yield of their commercial assets, because they don't know what they are, and even less the market value and the yield of those assets. And that should be in the interest of the public, of the taxpayers, but also of investors, to understand this in a more transparent way.